After 25 years of trading the stock market, I figured out that it's really not that complicated. Here is how the stock market works. Let's look at a couple of charts and I'll show you a few examples that I'm thinking of. But what I want everybody to consider is that the stock market is actually a pretty logical place. Where people get messed up on the stock market is trying to do too much with their own timeline in mind as opposed to what the stock market has in mind, number one. And number two, by really just overcomplicating things, because it's really not that complicated. Let's have a look at a couple of charts here, and I'm going to show you just exactly what I am talking about. Now, on one of my past videos recently, I showed this chart. This is the S&P. Now, you guys, when you watch the news and so on, you'll probably hear everybody say the Dow is up, the Dow is down. Nobody cares about the Dow. The Dow Jones Industrial Average, no trader watches. We watch the NASDAQ, we watch the S&P. Those are the two charts you watch. The Dow and however many thousands of points it's up and down, who cares? You want to watch the S&P specifically. And here is an S&P chart with quite a long timeline. Now, this might look a little crazy in the video here, but this is taking us back. If we zoom this back, this takes us back to the 1980s. Now, what this red line is, I'm going to get rid of one of these here. What this red line is long-term price. That's all it is. This is long-term average price of this chart, right? So naturally, you would imagine when we get too far above that long-term price, things are expensive, things are getting overbought, right? And when we get too far below it, things become cheap and eventually people start to buy again. So that's really all it's telling us. It's just accumulating an average price of a long-term period of time. Now you can see that in this long-term price, the S&P since the 80s, since the 70s, really this takes us back to the early 1980s. This is basically 40 plus years, creeping up on 45, almost 50 years that the S&P has stayed on the north side of this long-term price. Now we looked at this chart right here and we saw that in 2000, this right here is the dot-com bubble, right? So in 2000, we got pretty far above that long-term price, and it takes a big dip, right? Because we know the reasons it took a dip, right? Everything got so overvalued, there was so much hype in the market, and so we take this dip below this long-term price, and it spends a little bit of time below this long-term price, quite a bit of time actually. This was one of the bigger market crashes that we had seen in a while. We see this big dip down. Finally, it gets below and stays below that long-term price for a while, starts to make its way back up again. What happens next? 2008. The great financial crisis where the housing market fell apart, debt was through the roof, everybody panicked, right? Once again, we go below that long-term price, we stay down there for a while. Both of these are around 2 years or so below that long-term price. Now that is painful. When you're a trader and you're trying to put into perspective, sitting and dealing with a difficult market for a year and a half, 2 years, that is painful, that is tough. But when we look at this and we say, okay, something as big and horrific as the dot-com crash, and if you weren't there, if you weren't watching it, this was a huge deal. Big panic, big sell-off. 2008, most of us remember 2008 very, very clearly. Big sell-off. But what happens, the market gets down there, and it does tend to recover. Now, anything we look at in the entire history of the stock market, it has recovered from. So it's such a hard argument for people to say, well, I hate Trump, and so I'm going to go very negative on this, and I think that the stock market will never recover because of how these policies are going. Whatever your opinion is, just remember, look at the stock market and say, what does the stock market do? And the stock market is incredibly resilient and it recovers. And that is so super important. It recovers. Now, there is some pain along the way, but it always recovers. And in fact, in the last 50 years, these two big times that had nothing to do with tariffs or Trump or anything were the only times that the market has extended, more than about 12 months below long-term price. And really, we don't have too many other examples in the last 50 years that the S&P went below long-term price, right? Right here, that's it. 2020, remember we tried to have interest rate hikes that panicked the market. It just touched long-term price right here. 2020, very short-term dip below long-term price. 2022, when interest rates were going up, just tested long-term price. And over here, you can see that we have just tested long-term price and had a big rally off that, by the way. So remember, the stock market is about just looking at what happens and understanding that there are two things that we need to keep an eye on. Number one, we want to look at catalysts. Number two, we want to look at whether something is trending or range bound, right? What kind of chart are we looking at? A trending or range bound chart? And what are the catalysts, right? So when we look over here, remember that it's so easy for everybody to get very, very negative as we touch long-term price, and certainly as we go below long-term price on the S&P. 2022 sentiment was in the toilet. 2020 fear and panic and sentiment in the toilet. 2008, 2000 couldn't have gotten worse, right? But we recovered and things made their way back, and so that is kind of the theme that we need to keep an eye on. You're going to hear everybody say, oh, none of that stuff matters. What you have to look at is all the numbers and all the details. Sure, all of that is important. I am absolutely a fundamental trader. I look at all kinds of metrics for companies and so on. But when we're looking at the macro perspective, and macro perspective means what is the big picture? What is beyond just the numbers? What can we see, and how can we really take in what the big picture is? That's our macro. And so in this macro play right here, we see that the S&P came back down to long-term price, had a big rejection up there, down here, sorry, and made its way back up. Anything beyond, and it's interesting, right? You know, here's our high of 2022 when rates started to hike and the market took a big dive. Came down, we hit that level, which was a nice little overlap of that long-term price. Anything below here is a long-term buyer's dream, right? Anything you get that goes below that long-term price is where we should be buying and holding for the long haul. Now, when we go to number two here, which is a market range bound or is it trending? Certainly the S&P is trending, right? This is something that, you know, runs and pulls back to the, we call it the reversion to the mean, right? Reversion to the mean. It gets too far from kind of its average price, whether it gets too far below or too far above, and it has to revert to the mean so that balance can be kept. Now, when you look at a lot of different stocks here, let's look at something like NVIDIA. You just have to use some logic, folks. We just have to use logic. Is the world of AI going to go away? Was that just some hype and then it's gone? Or is the world of AI just getting momentum? And right now we're dealing with market sentiment, we're dealing with tariff uncertainty, we're dealing with, say, you know, what is NVIDIA going to be able to sell and who are they going to be able to sell it to? There's some questions there for sure. But it's no major surprise that NVIDIA, it took the world, you know, as human beings, we're slow to adapt and to adopt technology. NVIDIA spent a lot of time doing a bunch of nothing, right? All through the 2000s. But do you guys remember technology in the early 2000s? You know, being able to log into your bank account from your phone was tough. I remember early 2000s having to like go to a web page on my phone and log into my bank account, and then I could see just very few things. Technology was terrible in the early 2000s. But when we started to get a bump here and we started to feel much more comfortable with how technology was developing, and we saw, you know, the big run in tech stocks anyway, NVIDIA starts to run. And then, of course, we see NVIDIA make some pretty aggressive runs as the AI craze kicks off. Now, has NVIDIA seen its highs? I don't believe it has. But where is NVIDIA in this long-term price game, right? NVIDIA has done a pretty good job in the last many, many years. It kind of, you know, a lot of flatness back here, but in the last decade or so, NVIDIA has stayed above the long-term price of its own stock for a pretty long-term period of time. Remember when the Mag 7 stocks got really hit with interest rates in 2022? There's our 2021, end of 2021, beginning of 2022 highs. This tackles all tech stocks. They sell off super hard. Only a short dip below long-term price. And then NVIDIA takes off. Now, where is this stock currently? This is a trending stock. and I can't help but believe that this will continue to be a trending stock. Now, do we need to come back and retest some of these long-term highs, or sorry, long-term prices again? Sorry, my drawing tool is having trouble. There we go. Do we need to come back and review that? Probably. Is there a possibility that that long-term price needs to be tested? It hasn't been touched in 2 years. So do we need to come back and retest that? Probably. Will we get below it? Maybe. Maybe. But this is buyer's dream. This is where we should be looking at this stuff, right? And trying to find opportunities to get as aggressive as we can once those long-term areas start getting retested. Now, here's an interesting example. Look at this one right here, Procter & Gamble. It doesn't take a genius to realize that no matter how recessionary anything gets, no matter how crazy tariffs get and any of that stuff, we're all going to need toilet paper. We're all going to need toothpaste. We're all going to need detergent to wash our clothes. That's just how it goes. You look at a chart like Procter & Gamble, look what this does. Long-term price, right? 2008, everyone panicked. Here's our dot-com, crash right here. It goes below. It goes below. Here's our 2018, interest rates starting to make a run. Here's COVID, right? But when you look at long-term price, this loves to test long-term price, but this is in the same boat as basically the S&P. It stays on the north side of long-term price. Now, I can count on probably 2 fingers the amount of times that I bought Procter & Gamble. But is it a good opportunity to buy Procter & Gamble as it tests long-term price and even gets below long-term price? Of course. This is a trending stock, and these are consumer staples that we'll always need. So do we want to be looking at this pretty hard as we get down towards that long-term price? Absolutely. Of course we do. So we want to keep that in mind. Look at a stock like this. This is Alcoa. These guys make aluminum. And they have a big international footprint, so there's a ton of uncertainty here. Is there a recession? Is there going to be huge need for these type of material products, right? Steel, aluminum, copper. And how are tariffs going to affect that? There's a lot of uncertainty. But when building is strong and when appetite for commodities goes up, which it always does, the stock market is a cycle. That's all it is. It's just a cycle. So when those things happen, these kinds of stocks become very, very attractive. But look at this stock. As opposed to, and in fact, I'm going to go out to an even larger time frame. If we look at this stock, this takes us back to, once again, about 1990. We can go back further, but let's just take the last 30 or so years, 25, 30 years. Okay, so, excuse me. So we take the last few decades on this stock, and we say this is not a trending stock. This is not a trending stock. This is a stock that deals in highs and lows. Now, at some point, this may become a trending stock. This may take out these all-time highs or maybe take out these all-time lows. But I'm not going to bet too much money on that. What I will bet on is that catalysts tend to pop up when we get to these levels and these levels and these levels and these levels, right? It's not rocket science. It's not rocket science. I don't super duper want to be involved in the stock through here, or certainly through here, or through here. But when we have those rare opportunities that we can be involved up here, or we can be involved down here. Now, full disclosure, I don't love shorting. It's not the way, I just don't do it that much. But great opportunities up here. But buying big dips can be such huge profitable opportunities, and that's exactly what a stock like an Alcoa is giving us, right? Are we going to ever stop needing aluminum? Probably not in the foreseeable future. Maybe never. Probably never. We'll probably need aluminum more than we do currently, right? So when we look at that and we say, okay, here is this stock that in the long-term run, it's been up, it's been down. This is 2008. This is, dot-com bust, right? This is going into 2022, and then interest rates start to go crazy, and everyone's worried the economy is going to collapse. And then here we are with tariffs and so on. What's going to happen down in these lower levels? Probably a catalyst. If I had to take a wild guess, probably a catalyst, right? There's going to be some sort of inflection point that I would not feel bad getting involved in. I'm not saying that this stock is going to go down to $13.90 and come off that level. That's absolutely not what I'm saying. But I'm saying to become a buyer in the, I don't know, $15 to $20 range and continue buying all the way down, probably not a bad idea. Probably not a bad idea. I'm not making any trade recommendations, but I'm saying if you're a long-term trader, why would you not want to start getting involved in something down in this range? To hold on to it for the long haul and let the news cycles pass, and let the panic pass, and let the tariff news pass. There's crazy news cycles here and crazy news cycles here. This is 2020. What kind of news cycles do you think were happening there? This is 2022. What do you think was happening here? The Fed is raising rates. They're going to crush everything. These are news cycles. When the news passes and the impact hits the market, then we look at the big picture and we say, what kind of stock are we dealing with in the first place? And what is the sentiment, right? Everybody's overly bullish at the highs and they're overly bearish at the lows. This is where we need to flip the script and be working as effectively as possible in those areas. Does that make sense? I hope it does. There are countless stocks out there that when we look at this big picture and we say, what are we dealing with? What are we dealing with? Let's look at Apple, just out of pure curiosity. Here is Apple. Apple has news items galore, right? What's Apple going to do? They have China. They have all this stuff. Is Apple going to lose its place? It could. It could. There are things that are happening. But when we look at the last, same kind of picture here, right? We look and tons of chop. Apple was a terrible company through the 80s and the 90s, right? And then of course we get through the dot-com bust, and then we start getting news of the iPhone. The iPhone was right in this area here. And what does Apple become? It becomes a trending stock. And there is no reason to believe that Apple is not going to continue to be a trending stock until there's reason to believe that, right? So what is Apple doing over the last 20 years or so? It's staying above long-term price. We had a long-term price test right here. Am I saying buy this right here? No, I'm not. But am I saying do we need to be looking for opportunities to get long-term exposure below long-term price? I think absolutely so. So that's the kind of stuff that I'm looking at and that I'm watching for. Identify the type of stock you're looking for and identify the long-term price, long-term trend, and take it from there. There's crazy opportunities out there. Now, there are times where we have to wait. We have to let news cycles pass. We have to let investor sentiment improve. Those are absolutely all elements of the stock market. But once we do, there are opportunities. And we do not want to miss these opportunities because they will be very extensive. I hope this is helpful. Please leave comments below. Let me know if you completely disagree about this is how the stock market works. I'm happy to discuss. Let's chat about it. Good luck. Happy trading, folks. I hope you find some great opportunities in this market because there definitely are some. Good luck, everybody. See you soon.